I'm a chartered accountant, and what I've seen is HMRC has been massively clamping down on those people who've maybe sold at Amazon or eBay and they've not declared their online income. And we've had loads of inquiries through the website, but also from our clients saying, look, I've received a letter, and HMRC is saying, look, we know you've sold on eBay and Amazon, and you need to send us information and give us a tax return. And getting one of these letters is incredibly stressful, but you're not alone. So what I'm going to do is explain what these letters are, why you may have received one, and then how you need to respond to it so you can actually resolve this quickly. HMRC ultimately has got all the data from the marketplaces. That's because the online marketplaces have to share that data with HMRC legally, and therefore HMRC have got more information than ever on who's selling and how many sales they've made. So they've got a great idea about who they need to target. And they've matched your name with this data, and then they've sent you a letter out and they've asked, look, we kind of know you've sold stuff online. You need to tell us about it. So if you've sold something, maybe like personally, you've bought items, previously you've used them, and then you've sold them on eBay, that's fine. That's not taxable. The only time when it's taxable is when you went out and bought items with the sole intention of actually selling them online. So these are the people they're targeting, and these are the ones they're after. And many people don't know, is this taxable or not? I didn't make a profit. But ultimately, HMRC only care about revenue. So you might have made a loss, but they still want to know about this on a tax return to make sure. So they're just going to assume you've sold, let's say you've sold 20 grand, but you made a loss of 2 grand. They still want to know about that 20 grand. And they also want to know, is it a loss or not? So they know if they've got the right tax. Many people don't realize that even casual selling, when you're selling for a profit, is still taxable. And even if you've made a loss, HMRC still want to know on a tax return you've made a loss to make sure they've still got the right tax. Because all they see is how much you've sold, and they don't know the costs involved, and therefore you've made a loss. So they want to know that. HMRC is not being sneaky. They've just got all the data they need now to actually enforce existing tax rules. And they put the onus on the taxpayer to already know these rules and follow them. This is serious, and don't ignore it. HMRC is going to start with this letter, then they're going to send you more letters. Then they might start issuing you fines, and they might end up taking you to court for tax evasion. And they already know your sales data. They've already got it, and they probably know more about your sales level than you do right now. So don't bury your head in the sand. Paying the tax now is cheaper than ignoring this and then ultimately getting fines and penalties later on. So take a deep breath. It's normal to feel overwhelmed or a bit worried about letters like this. And that's kind of their purpose. But this situation is manageable. And as long as you respond to HMRC promptly and helpfully, you're going to avoid fines and you can be able to resolve this quickly and be able to sleep at night. So as soon as you realize if this letter is actually relevant to you, what you need to do is start collecting information. So you need to see when you started selling as a business, when you're buying stuff to sell online, you need to get all your sales data together. You then need to get your fee data, and then you want to start looking for invoices, looking at your bank statements to see which items were business related. You want to maybe get some computer costs in there where you've maybe bought a computer to start selling online. And you want to get all that together and then make a profit and loss for each year. So then you can share that with HMRC so they can agree what level of tax you should be paying. The key thing here is that it should be all backed up with workings. So they want to see listings of your sales, listings of the fees, the listing of the invoices, and then they want to see the supporting invoices as well. So make sure you've got all that together before you go and respond to that there with HMRC. So if it's relatively simple, you can probably do that yourself and respond to HMRC. But if it's over multiple tax years, maybe it's involving a lot of revenue, maybe it's just a bit complex, then you should talk to an e-commerce accountant. And I say e-commerce accountant just because they understand the marketplaces, the fees, and they can get the information from you and then present it to HMRC in a way which they understand. And then they'll also be able to argue with HMRC to say, no, this is the right answer and this is the tax you need to pay. If you do appoint an accountant, then they'll do the workings for you and they'll also talk to HMRC and then lobby on your behalf. What they'll also recognize is that you've appointed a professional, and in some cases, they'll waive the fine because you've sought advice where you need to. So getting an accountant might actually save you money in the long term. To give you some reassurance, we've helped hundreds of clients deal with this issue. And in one instance, a client came to us, they'd been selling on eBay for 4 years. And then they got a letter from HMRC saying, look, you need to pay tax. And because it was eBay, they thought I didn't need to pay tax. So they were a bit shocked. They contacted HMRC and they said, look, from the data we have, it's going to cost you 100K. So they came to me and they said, look, got this issue, they're saying 100K, is this right? And I said, no, because all they're doing is looking at the revenue data. That's all the data they've got. So what we need to do is go find your sales, your fees, your invoices for cost of goods you've sold, any other expenses like computer expenses, and then any other business expenses which are allowable. So we spent a long time getting those together, putting together the full profit and losses for each tax year, and then we presented it to HMRC. And what happened was it went from a 100K tax bill to a 4K tax bill because they hadn't made that much money from it. So it saved them almost £100,000 by making sure they got the right person in at the right time. And at the same time, HMRC didn't issue them a fine because they'd sought professional help. And the great thing about this is that they're still selling today and they've got a limited company and actually they're growing as well. So the key takeaways are, don't bury your head in the sand. This is going to escalate if you don't do this letter early on. But if you've only sold personal items, stuff you've had around the house, which you've used already, then you don't need to do anything because they're not taxable. But then if you have bought items with the intention of selling them online, then you do need to respond to this. And if you've been able to keep a log of this, you've got your revenue, your fees, your invoices by date, and you've also got the backing of the invoices, and it's very clear, then you can contact HMRC yourself and send them this, and then they'll tell you what to do next. They'll agree the numbers and then tell you what to do next. But then if it's complex, or it's over multiple years, or it's a huge tax bill they're saying you need to pay, then you need to get in touch with a professional, someone like us, an e-commerce accountant, who's going to be able to help you understand the marketplaces, but then also help you reduce that tax bill down. Facing HMRC can be scary, but you're not helpless and you're not alone. With the right steps, you can avoid hefty penalties and move on so you can start sleeping at night. So take care, and remember, taking action now is incredibly important and it will save you grief further down the line.